Hello and welcome to Season 2 of Investing for the Long Term, hosted by Downing Fund Managers Judith, McKenzie and Rosemary Banyard. During Season 2, Judith and Rosemary will take you on a journey through their extensive network of fund managers, company founders, CEOs and key people from across the investment sphere. And the first episode to start the season off requires very little introduction, a legend of the small and mid-cap space, Andy Brough. Andy is head of the Pan-European Small Cap and Mid Cap team at Schroders, as well as the lead or core fund manager for several funds within the team. Judith is partner of head of Downing Fund Managers, and Rosemary is an award-winning fund manager who manages the VT Downing Unique Opportunities Fund. And just before we get started, please remember that all opinions and information are for educational purposes only and do not constitute investment advice. Investing carries a high level of risk and is not right for everyone. Always do your own research and seek financial advice from a regulated financial advisor in your country before making any financial decisions. With that being said, let's get started.
Well, Andy, it's great to have you here, that stalwart of the small and mid-cap community. You've been around the block many times with the UK and small cap, but probably worth maybe us giving a bit of background as to how we came across you at the start and our journey with you. Rosemary, you're probably best placed to start that conversation.
Yes, Judith. I first came across Andy when I was an analyst on the sell side. I was analysing a sector that doesn't exist anymore called the textile sector. And Andy was at Schroders and he was responsible for research into several sectors, I think, one of which was textiles. So I first met him when he would ring up and ask me lots of difficult questions about companies that I researched. And then moving on a few years, I got a call from him saying, my number two has resigned and could we meet for lunch? And so we had lunch, and the upshot of that was that I went to join him at Schroders and we worked together for 18 amazing years. So Judith, how about you? How did you meet Andy?
Rosemary, that's longer than some marriages, so well done. How did I meet Andy? I actually can't remember and pinpoint a date or a specific meeting. Andy's just one of those people that has always been around. Trying not to age you too much, Andy, but you have been. And yeah, we stumbled across each other, I suppose, in different guises, maybe actually sometimes as my involvement or with my involvement with the Coated Companies Alliance, perhaps.
Yeah, and also we were
more?
judges. I think we started off, we were judges, weren't we, on some industry awards. I think that's when we first met.
And Andy, any observations about the first sort of meetings with Rosemary in particular?
It was quite interesting at the time, actually. The textile sector had a few staid companies in there. It could be Courtaulds or Coates. But then it had one or two upstarts which were really trying to change the dynamics of the sector and grow incredibly quickly. And one of those would have been Colour Roll, John Ashcroft. And Rosemary famously wrote a sell note. Was that right, Rosemary? On the Colour Roll, which obviously didn't go down too well with John Ashcroft. And Schroders had quite a big position in it. And I said to the people here, look, we need to have a real think on this. And John Ashcroft did an order to try and convince us, stuck us on the helicopter and flew us around these various sites in the UK when it became apparent that he was making 11 million pillows a year. And you just think, how many chickens is he killing? And how many feathers is that? And the whole thing, very poor accounting, Rosemary, wasn't it? Just
terrible.
Eventually blew up. And I think that was our first sort of bonding session over, dodgy accounts. That struck me about Rosemary was that sort of level of attention to detail and being brave on call, which are real traits, I think. If you're going to make it in fund management, you need a bit of everything, but you do need to be brave and you do need to be forensic.
Yeah.
Well, that's very kind. So anyway, this call is about you, not me. Could you start by telling our listeners about your career journey, starting from the beginning and how you got into fund management?
Well, I left school and at that time, I think 1 in 4 graduates, once they graduated, went off to do accounting. And my dad, having been a bank manager with 0 qualifications, really was quite keen for me to get into some sort of stable business. And I started off with accounting And it was a great training ground. But at the time when I left university, even though I was interested in stock shares, I never realised that there was this job called fund management, which became a job where you got paid quite decently and you got to gamble with other people's money, which I'm surprised at the time it wasn't slightly more popular, which is incredibly popular now. And I was lucky enough, all of us really, at this sort of age, to start in the city where fund management was very much a backwater. All the bright people, when I started, were in broking. Fund management was where Buffton Tufton, the third, was sent, because he or she wasn't bright enough to go do corporate finance. And started off at traders analysing 5 sectors, most of which don't exist now: paper and publishing, textiles. It's a sort of lesson here that you've got to keep moving with the times. And then at the end of 1988, Schroeder said, look, will I take over the management of the small companies team? And having never managed money before, and I went, yeah, okay, let's have a go. And I think in those days, you used to have, McKenzie did the valuation, and the valuation would arrive once a week. You could actually see what your holding was. Obviously, it was a bit nerve-wracking if you were trying to sell out of a whole position. And I think the previous incumbent had stuffed the holdings, i.e. the 25 largest holdings, with the property shares, which at the start of 1989 sort of halved in value. So that was quite a good lesson, actually, to start with. It's amazing how things have changed from then. We launched the mid-250 fund in 1999. We won quite a few mandates together, Rosemary, and we launched the investment trust, won that. The trick in fund management is you just got to keep evolving, because the world is becoming an increasingly competitive place. So what was a lucrative business one day, over time, declined, and you need to go and find another business to try and maintain the margins. Otherwise, it's incredibly competitive. But it is a great fun job. With people I've met over the time in companies, and what you've learned and the money you've made climb, it's been great fun.
And did you ever, and especially in the early days, did you ever sort of regret at any point going into fund management? What was the negatives about those early days?
Having come from Pricewaterhouse, where you could be working 7 days a week at certain parts of the year, to arrive in Schroders, where the working hours appear to be from 8:30 to 12:30. And then you go for lunch. And I suddenly just discovered a whole new way of life, actually, which obviously I've tried to continue to this day. But you quickly went out for lunch. And I think after 6 months, I thought to myself, you know what, is this job going to be enough for me going forward? And then I started getting more involved, more sectors, and the market was moving. Don't forget, I joined in June 87. So the first 3 months of bull market and long lunches, then shortly preceded by the great crash for the next couple of years. And so there were times then, and I kind of look back now and think, God, the research notes used to arrive with an elastic band on, and you have a list of names, and then the names were crossed out, and then it was circulated, or you go into the library and you get an Excel card. And sometimes I wake up in a cold sweat now just thinking, we've got the same number of companies now as we had then. And the amount of information we have now, it's now being applied back to the past. It is quite a scary factor, actually. People complain about the lack of companies in the UK market, but boy, there's still not a lack of information.
Yeah. What have been the most rewarding aspects of the job for you?
I think this job is about winning. It's about winning. It's about coming in and seeing a share that you build up a big position in, being taken over, or actually just making the jump from, if you like, the small cap to the 250, from the 250 to the FTSE 100, and also avoiding things. We get them wrong, obviously, but when you've found something where you think the accounts are a bit suspect, and you've managed to get everyone out, and you've got out of the position, and then 6 months later, the company disappears, and it could be a Carillion, or it could have been an independent energy, but we were out way before it blew up. And that's a great feeling at the time, but it's a bit like being a sort of football player. Just because you've won 3-0, you come off the pitch, you've got to go and do it again on a Wednesday. We have to do it every day.
You mentioned the accounting aspect of it quite a few times already. Obviously, having your background has clearly helped. When you see some of the grads coming through now, do you think there's enough weight to put on that focus on accounts? Because they've got so much more information you can disseminate in so many different ways, but actually the real source of truth is the accounts. How do you feel about, I suppose, your experience and expertise there, and how some fund managers are maybe not quite as diligent in that regard these days?
I think at the end of the day, if you're a fund manager, you can't delegate your pen. You can't say, all the shares are going up and I felt a bit left out, so I thought I'd better buy some. Or they're going down, I thought, actually, the market knows what's going on, I'll sell them. Two great trends that have changed since I started. One, momentum investing never really existed. When we started, the share moved by 10% in a month, people say, that's a bit racy. I wouldn't be involved in that one if I were you. Yeah. And spreadsheets. Now people think they can analyze a number 3 years out. I mean, I look at some of the grads now, they come in and they've got all these spreadsheets and they say, but Andy, how did you know the share was going to go up? And I said, well, I think there's probably more demand for the product than supply and the price could go up, but you can't get that in a spreadsheet. So what I say to the grads is, look, you can come to as many of my meetings as you want, because at the start, I would like you to know a little about a lot. And then in about a year's time, you'll know a lot. Yeah. And then you'll start doing the jigsaw in your head, and you might pick up when the results come out. Okay, this company's increased its profits, but let's see what's happened between the second half of last year and the first half of this year. And let's have a look at the stocks note and see, has that been down to a reduction or an increase in the stock provision? And I said, this is the sort of spreadsheet stuff I do. The stuff you're doing, you're just guessing. Yeah, let's go and look at some real numbers and some movements and try and piece it together.
Yeah, I think that's absolutely right. And I've always found, I can remember even recent times sitting in meetings with you, and you'll open the accounts and you'll sit next to me while the company are presenting and so point to some little note in the account, put your finger on it, and you've spotted this movement that nobody else has commented on. Yeah, so it's a real skill.
It was quite interesting, but I learned that actually. I remember being on an audit at Metal Box when it existed, big round building in Reading. And we'd been working like 7 days, 18 hours a day. And the part that comes out and it reviews papers or whatever that you produce. And he said, let's look at the half year splits here. And he goes, look, there could be a problem there. I thought to myself, hold on a minute, mate. We've just been working 18 hours a day for 7 days. And you've come along and you've just gone, look at the numbers here. And the great skill in this job is you must never stop learning. So you meet people from all walks of life. And that guy in Brindle, who's the partner on that job, you just think, I've taken that away and I've used that all the time. And other people I've met, they've gone, have a think about this. And you just build up that knowledge base. And so the job is to then say to people, look, you can spend all your time looking at the screen, because it's quite nice, isn't it? Watching things you won't go up, watching things that don't go down. But at the end of the day, you've got to keep a track on these things, and you can't rely on the market to be the judge and jury on it.
Have there been other people that you can think of who've been a big influence on you, who've given you really particular insights in your career?
It's taking bits and pieces from each sort of person. I mean, I'm very lucky to train with when I joined Schroders, the legend, late Jim Cox, who, when I arrived at Schroders, we had a butler who went round with afternoon tea and morning coffee, and the Financial Times in the morning and the Evening Standard in the evening if you were a director. And this guy, Jim Cox, has arrived from the Peru with a beard and brown shoes. So he didn't stand out in Schroders in those days. So we immediately identified each other as kindred spirits. And it helped because he lived in Muswell Hill, just around the corner. So we used to travel in together. And he took me under his wing and he took me to all the most interesting meetings. And at the time, we had the investment division was pretty small compared to the merchant bank. They were all under one roof. And so every time the merchant bank did a deal, we were expected to be involved, either underwriting or whatever. And famously, I remember to a meeting with Wembley, who were a client of J. Henry Schroeder Wag, and the share price had gone from about £1 to 10p, and they were having a rescue rights issue. And the late Brian Wilson, the CEO, arrived with all the Schroeder's corporate finance people behind him. And he said, I've been here with my shareholders all day, so I'm not sure how much you know about my company as you're not shareholders. And late Jim Cox, picking his ear as he did with his biro, without looking up, said, I think you can take from the fact that we're not shareholders, that we know a lot more about your company than your current shareholders. And at the time, I just went, oh my God. I've only been able to use that line once. I can't remember who it was. But that kind of taught you that actually there was no substitute. And Jim, we go home on the tube and get the Evening Standard out and he pointed at a share that was down like 20%. And he got those. And I go, yeah, he goes, he said, I've never trusted those accounts. And it was just really that sort of attention to detail and the respect that man had from all the corporates. And that's the other thing he taught me was that actually building your own LinkedIn network at the time, which I've done by just knowing a lot of people and just being in touch with them, taking them for lunch, just always being available to have a chat with them. And then that leads on to other people. And that sort of skill set, it's gone with the youth of today. They want to sit there. They don't want to go out and meet so-and-so, then you can shoot to someone else and you've learned something, which you could then go, hold on a minute, that area might be interesting, or I need to have a look at that. There is that relentless attention to detail.
And one of the aspects of our job as well is the assessment of management, obviously. And some of what you're talking about there ties into how you can evaluate management. But is there any sort of magic bullet for that black art that is all about understanding people?
Yeah, it's fascinating, isn't it? So I got interested in the stock market when I first read Jim Slater, Return to Go. And I remember about 25 years ago, a bit longer, I met Jim Slater for lunch. He's super excited. And I said, well, Mr. Slater, your hero of mine. Da, da, da. And I think you must go on loads of company visits. Because at the time, that's what people did. You might be visiting 1 or 2 companies a week. And Jim Slater said, no, I never do company visits. I went, what do you mean you don't do company visits? He said, well, look, let's take this. You turn up at the company, you have a cup of tea and a bacon sandwich with the CEO. He then takes you into the factory where there's about 1,000 operatives. He walks up to the first one and says, hey, Dave, how you doing? Here, your wife's had a baby. You need any time off? He said, what is your impression of that company? I said, attention to detail, knows the staff, journalistic. And Jim Slater goes, look, the guy isn't even called Dave. He's too afraid to say anything. Okay. And probably the stock's out of date and the company's not being well run. And after that, I don't think I went on a company visit for about another 15 years. And Rosemary, I always used to joke that there was a very high correlation, and Rosemary knows the stock I'm going to be talking about now, high correlation between going on an overseas visit, your famous trip to Las Vegas, and then the subsequent massive share price underperformance.
Yeah. And that one was famous also because the chief executive flew back from Las Vegas first class. The fund manager was in business class. There was something slightly unequal about that. Yeah. I remember it well. I wonder if we could talk a bit about the industry. And you've mentioned already that there's been a big drop in the number of companies in the UK market. How do you think about that? And particularly, is there other things that you think could or should be done to improve that dynamic?
Well, it's quite interesting, isn't it? The main trait has been the sort of arrival of private equity, which when the 3 of us started was called venture capital. But they obviously decided that venture capital was just far too risky. So let's go and leverage up existing businesses. And it's partially, I remember sitting in Xavier Rollet's office in the London Stock Exchange when he was CEO, and he had a poster on the wall. And this poster was how the stock market works in the 1950s. And Mr. and Mrs. Jones handed over their savings to a stockbroker who then invested it in a company who then bought some plant and machinery or systems or whatever. And then Mr. and Mrs. Jones were then rewarded over time with a rising stream of dividends or a rising stream of earnings. Now, I went and had a good look at that chart, but nowhere on that chart could I find the phrase bailout private equity. And so companies had to come to the market for the right reason. Another one of my mentors has really been Peter Mead at Abbott Mead Vickers. And he had this lovely phrase which sort of applies, which I think is one of the reasons why the new issue market is just, it's such a terrible state. It reminds me, when I was 4, my mum saying to me, yeah, Andy, you've got your mate's party. I've got you that new outfit. Go upstairs and get changed. Went to the party, came back. Following week, my mum goes, look, there's another party. I washed the outfit. I said, Mum, I'm not going. She said, what do you mean you're not going? Didn't you have a really good time at that party last time? I said, I did, but I'm not going to this party. She said, well, but why not? I said, Mum, because at that last party, everyone left the party with a balloon and I didn't. And it's a bit like thinking about the IPO market. Yeah, everyone has to leave the party with a balloon. David Mayhew, an absolute genius of his time, he managed to fill all the roles like global book runner, etc., on his own, managed to actually price a new issue, trying to get his client the best shareholder register at the best price. And then price went up and everyone left the party with a balloon. Now, if you float private equity or the management run up with all the balloons, then why is anyone going to turn up to the next party? And I think that's a big problem. Tell people, get into the habit of, or the ability to make money from new issues, or more importantly, you get the retail punter out, because the big banks don't mind Schroders or whoever losing money. But if Mr. and Mrs. Jones are losing money, then that is another thing. And that's, I think, the only thing that can get them back on the straight and narrow.
Yeah. And how would you improve the current landscape then? If you were to do one thing, what would you change?
The change, I'd say you've got to have a decent sized retail element, because actually, since I've discovered the likes of Twitter or X, I've realized that actually there's a whole world out there of people who are interested in stocks and shares. And it can only help if these people are buying shares and making money, and the banks are effectively having to be more honest with them than they're going to be with the institute.
Yep.
The FCA, for all their wisdom, seem to think that it's too risky for Mr. and Mrs. Jones.
Yeah. Can we talk a bit about the budget and obviously the new Labour government that's come in, and be your reflections on the budget and also what you think the Labour government will bring to the party or not?
Well, it's quite interesting, isn't it? I was looking at the budget thinking, is it a bit like the Blair and Brown budget when they first came into power? When John Smith had died, Blair and Brown rocked up and Blair said to Brown, look, you can go and be Chancellor or be Prime Minister. And Brown famously said, I don't know much about economics. And Blair said, yeah, I thought you were going to say something like that. So I bought you a copy of Lips's Economics. He said, there must be something in there that can help you. So Brown's flicking through and he discovers the multiplier effect. And he goes, oh, that's interesting. If I spend £1, then that goes through the economy. He gets £8 of spending. And the next page, create more jobs. So the government then created 50% of the jobs and off we went until the whole thing blew up. Now, so this time round, you can't look at it. Well, there's definitely a move trying to get the money to those who have a higher propensity to spend than people like us. Yeah. I'm not just picking on you, Rosemary, but, so that's, I think that is their direction of travel. They recognize, we call it investment, but let's give more money to people who are going to go and spend it. And let's try and get the economy growing this way. Now, this whole national insurance thing, I don't think has been really thought through in terms of what are not just the frontline impacts, but it's just like, so if you're Hilton Foods supplying Sainsbury's, you're going to put your prices up. And I think it's going to be a fine line to tread actually. You look at companies and companies will say, right, where they can, and they'll put their prices up. But in the past, when I've been at marketing with you, Rosemary, we've always spoken about pricing power, which is called it, to pass on inflation. So I think the stock market point of view, the winners are going to really win and the losers are going to go absolutely front, actually, in terms of profitability. And then what that means for investment, we'll wait and see. But it's tricky because all governments are running deficits, which are unsustainable. Yeah. I was in Paris for the Olympics and in my very fetching Olympic outfit, I had my picture taken outside Voltaire's house because I thought we are heading for that Voltaire 1767 moment where it says paper money always returns to its intrinsic value. You can't think, are these deficits sustainable? People don't want to rein in growth's the only way out. And what is the best way of achieving it? Let's see what happens. At the moment, we just have one piece of the jigsaw. She's the only one who's got the picture of the jigsaw box. She knows where she's going, hopefully. Yeah, we've got the Mansion House speech. We've got these various things. So we might have a different idea of what the overall picture looks like. But at the moment, for companies and employers and employers, it's going to be, I think, pretty hard to pass these costs through.
You famously had a very neat summary of the government's P&L account. So what does that look like at the moment?
The government's P&L account, yeah, it kind of struck me actually. Marketing a long time ago that I said to someone that we spend a lot of time looking at companies' balance sheets. So one way we have a look at the government's balance sheet and you look at it and you think, I wonder if the auditors have actually signed this off. I don't think they have actually. But so there's some big numbers. If debt interest is now 100 billion. When I was going out, it was 23 billion. The US government interest is bigger than defense spending. So there's a lot of things going on here. And you just think, actually, it's taking time to think, what particular niche does that company have which can enable it to survive in what would become tougher and tougher times? And that links back to your point, Judith, about the IPO market, in that why would you float? You haven't got a brilliant story to tell. So it's, listen, investing's always hard, but let's see, Elon Musk might suddenly do a fantastic trick, get the government deficit under control, and everyone says this is the way to go. Does digitalization actually become more and more prevalent? And so actually, are the tech companies, or dare I say the property companies, which have less employees, the better place to be than the retailers? So that's the trouble with investing. It'd be really nice to come in and have the idea box on the desk and you have the box idea pops out for the day. But unfortunately, it's not like that. And just when you think you've got a portfolio you like, something comes out of left field and blows you up.
And obviously, you've been through a few dips in the market, a few depression recessions. Are you feeling more positive about the market at the moment or less positive than you were, say, 12 months ago?
I think we're continuing to see corporate activity. We've had a bid today at 120% premium. There's no doubt that companies are looking and saying, you've got a good niche, I'll take advantage of that and buy you. And danger is you get to a London market that is just full of a load of property companies. Does that then become attractive to other people? Yeah. Okay. You want companies whereby they're in a position to use the market for what it's there for, which is to provide risk capital for them to grow.
Can we ask what you think has been the biggest achievement of your career?
Yeah, I think launching that mid 250 fund at the time
Yeah.
was getting out of the ground for what was building out to a pretty big product. I think The
Yeah.
thing is, it's achieved my career is that I've managed to still be here after when I'm in my 144th quarter. If I'm honest, that is
Yeah.
the biggest achievement of my career because
Yeah.
you can't look at it and you think, well, all my 3 kids stay to work with me for a week each. And they go, Dad, I don't fancy this. This is too much like hard work. And it is. I say to people, it's the hardest job in the world because you just have to have a view on everything, massive understanding of everything, but just a view. And then you have to piece it together very quickly in your head. So I think that's my greatest achievement is that I'm still here and we'll see what happens.
And so just on that, you had your kids in, what advice would you give to your younger self?
I think I would have tried to look further forward. And what do I mean by that? All 3 of us can look forward a year or 2 years. Very few people can look forward 10 years. I remember when someone was asking me about Tesla when they were about $18. I said, you're having a laugh, aren't you? And so it's not suspending belief. Look at ARM, which came out of Acorn. It's not suspending belief, but it's just thinking. I remember when the late Jim Cox bought Vodafone. Mobile phone about 3 foot high. Literally, it was the old Dom Johnny. I'm on the phone and I looked at him like he was some sort of lunatic. This is a value investor buying Vodafone because he said, look, everyone is going to have one of these. And because he knew Ernie Harrison, Raycor, which spun off Vodafone, he could take him on the journey. I remember Coxie saying to me, he said, even Harrison wasn't quite sure it was going to work. But it's having that ability to go, you know what, that could be big. And we have fund managers here who were capable of doing that and then blew themselves up because the next one didn't work. But that is getting high enough up the risk curve consistently is the hardest thing to do. But that's what you need to do because we spoke about industries that don't exist or in stock market terms, be it textiles, be it paper and packaging or there's publishing or whatever. But it's just being able to say, this is what the future could look like. This is the competitive sort of moat or threats that exist. And so we're going to have a view and take a view on that. But the trouble is, you never get the whole picture. So a company might tell you something, but you haven't been to the latest exhibition and see what everyone else is doing. So, but it's having that ability to look further forward, I think, is the key thing. But then you have to get the first few right.
Yeah, that's good advice.
And the other thing, I probably shouldn't have followed my dad's lead and supported Tottenham Hotspur, given that I wrong.
Too late.
Is there anything that you wish we'd asked you and we haven't yet?
I think we covered it. I think it's important for people that have been fund managers for a long time to take the next generation under their wing and not inflict their prejudices on them, but just try and say to them that you've got to think of it in a simplistic way. And we've always thought about it, and we like shares where demand exceeds supply, and we don't like shares where supply exceeds demand. And then build it up and the lessons about what we look for. And then you've got to be prepared to have a go. And I'd rather people failed having had a go than failed because actually they turned out to be in-bed chuggers.
Yeah, I think we've got a great responsibility, haven't we, to help educate those other fund managers coming through, and hopefully they learn from some of the mistakes that we've made. I think that's a really important thing. It's a responsibility, really. Probably more importantly, your red shirts. What's that about? Andy is infamous for turning up at black tie dinners with a rather natty shirt on, or normally red, actually. Yeah, black tie, but a really strong red shirt on. When did you start doing it and why?
We used to have a clothing shop in Muswell Hill called Neckline. And this guy had low league football players going in there. So he had some really interesting shirts. I used to buy quite a lot of shirts there. And then one day I said, look, I'm going to this Stan Gold, one of our girls was getting married, and marketing department. And she invited me to a wedding, big Jewish affair. And I said, I need a dinner shirt. And he said, look, this is black shirt. And I said, you're having a laugh on it? A black shirt. He said, no, this guy did have the gift of the gab. He said, no, they're all the rage. They're all the rage, Jewish wedding. And I got there, it was just me and the photographer. Anyway, so that's how it started. So I started with the black shirt. And then I went in one day and he said, look, I've got this amazing red shirt, British Lacroix. And it is amazing, beautifully embroidered red shirt. It's probably seen better days now. And then, so that's it. It became my signature. I either wear the red one if I'm feeling optimistic about the stock market, or the black one if I'm feeling pretty bearish. You turn up, and I don't wear a tie or whatever. And the Alex cartoon guy's done a couple of Alex cartoons on it. But again, it's being slightly different. And when you come back to be a fund manager or invest in the market, you have to be slightly different. You have to be looking for things that other people aren't looking at, which are out of fashion, which you think are going to come into fashion. Now, I've been more successful, if I'm honest, at picking stocks that come into fashion than identifying fashion trends But you never know. Black and
One day.
one day, black and red could be the combo. I don't know.
Yeah. I did see you in a peacock kind of coloured shirt the other day as well. So I think you're capable of branching out. You're looking for the next best thing, aren't you?
Exactly. You never know. You never know.
The final question is, can you recommend to the listeners either a book or a podcast or even one of each that you find helpful?
I don't often read books, but there's one book which my middle son or middle child, Elliot, bought me my birthday, and it was The Trading Game by Gary Stevenson. I read it. It's 420 pages, and I read it in a day. Now, like any book, it's probably 60 pages too long, but I guess when you start writing them, you can't help yourself. It's a very interesting approach to the whole trading culture and what a trader looks for. There's been numerous books written on fund management. It could be Peter Lynch or etc. But this is the first one I've actually read about trading and how this guy got in there, how he actually got through the intern route, and just look what was going on about him. And it's just a really interesting read, actually.
Okay, I've just written that down. I'll be on Amazon in a second. Andy, that's been great. It's been a fantastic canter through your career and some great snippets there in terms of advice for young fund managers, but also us slightly older fund managers at any stage in our career. So thanks for that.
No, very enjoyable. Thanks a lot. Cheers.
Thank you.
Bye.
Well, that's it for today. Thanks for listening. In our next episode, Judith and Rosemary will introduce you to another key person from their extensive network from across the investment sphere. If you liked what you heard, please subscribe and leave a comment. And to learn more about Judith, Rosemary and Downing, please visit www.downingfundmanagers.co.uk. All the links are just below in the show notes. Thanks for listening, and we hope you have a great day.